Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's video I wanted to discuss some ideas on a couple different ways that you can structure your butterflies. So as we were going through the cues today and looking at a couple various ideas, the main thing that I was starting to structure was just a little bit of a hedge position because the S&Ps have already made their retracement back down into their 618, but the Nasdaq has not. You can see off of this major swing high to major swing low, right there, the 618 retracement of that move, which is an important area to focus on, would take you right back down into basically 140. So the idea here is that we're looking for a little bit of bearish exposure in this move, and a good place to contrast what I've set up there would be in something like IWM, because IWM has come back down into symmetry right there along with your 200-day moving average, and I think it's a good place to share the concept between looking at a butterfly for a bearish move like what we've structured in the Qs versus how you might structure it in IWM, looking for more of a neutral move. So if we look at those charts and we say, okay, that's why we're basing off the Qs, looking for a little bit of a push lower, then we want to try to set something up similar in IWM, looking to trade neutral. Well, looking at this first in the Qs, you can see that the concept that we've set up here, definitely looking for a move to the downside and then centering our short strike around 140. By doing that, where the 140 strike is $2 below the current market, you can see that we'll have positive theta, which is an important aspect of those, and then the negative deltas, which will benefit if we do move lower. If we wanted to look at structuring a trade in IWM, where you're looking for a little bit more of a neutral move, that's where you simply put the body closer to where you're currently trading. So going out into next week, and if I was going to do a very similar trade but set it up to be more neutral, this is where you look buying the butterfly around 136. I like thinking in terms of thirds here. So if we're going to position the butterfly out to be $3 wide, we look at it 139 and then 133 on the opposing end. I like to try to buy them under $1, being a $3 wide spread. That would put us right there within that 1/3. But then it's the idea of coming back and looking over at your risk profile graph and using the Greeks to understand where you would really stand with this directionally. You know, we still have positive theta. This is a little bit closer to being delta neutral, and that is one way that you can compare the structure of these two butterflies in relationship. For the one, you know, support at the 200-day moving average, and then for the Qs, the idea that it comes back down there and then retests the 618 retracement. So that's a couple of things that I'll be looking at as we get into next week. If you would like to have a little bit more information on how to structure those retracements and look for key areas like that in the market, Carolyn Broden will be giving a class this weekend that starts on Saturday, noon Central Time. We'll go for about 4 hours, and then you can also tack on some live trading or a subscription to her site if you would like. But that is something that I use quite a bit with my analysis. I found it very helpful in the structure of these spreads, and I think you'll find it worth your time. So have a great weekend, and I will see you at the next update.